Hello traders! Welcome back to another video on my channel. Today I've got something special for you. The Easy Breakout Indicator for MT4. If you're tired of indicators that repaint or give confusing signals, you're going to like this one. The Easy Breakout Indicator confirms its signals on candle close, which means once a signal prints, it doesn't move afterwards. It works across time frames, and you can use it on Forex, commodities, indices, whichever asset you prefer. But here's the useful part. It comes with built-in automatic stop-loss levels and multiple take-profit targets based on Fibonacci levels. It's designed to remove the guesswork from where you place your risk and your targets. In today's video, I'll show you exactly how to use this indicator correctly. And here's something extra. I've taken live trades based on signals from this indicator, so you can see how it behaves in real market conditions. Make sure to watch until the end, because I'll also show you where this indicator struggles, and that part matters just as much as the wins. Before we get started, a quick reminder. Forex trading always involves risk. Past performance does not guarantee future results. This video is for educational purposes only, and not financial advice. Always trade responsibly, and only risk money you're comfortable losing. Alright, now let's jump straight onto the charts and see how the Easy Breakout Indicator works. How to use the Easy Breakout Indicator. Understanding the signals. Buy signal. You'll get a buy signal when the price clearly breaks above the blue resistance line. That suggests price could continue higher. Sell signal. A sell signal appears when the price breaks below the red support line, suggesting price may continue lower. Entering the trades. For a buy trade, wait until a candle closes fully above the blue resistance line. Not a wick, a full close. Then enter the trade. For a sell trade, wait for a candle to fully close below the red support line before entering. That candle close rule is what keeps the signal from shifting on you, so don't skip it. Stop loss and take profit. You don't need to guess. The indicator automatically shows you where to set your stop loss to limit your risk. It also shows you 5 take profit levels based on Fibonacci targets, so you can choose how much profit you're aiming for. A simple approach is to close part of your position at the second target, move your stop to entry, and let the rest run. Risk management. Always protect your account by risking only 1 to 2% per trade. This keeps you in the game even during a losing streak, and there will be losing streaks with this or any other tool. Timeframes and assets. You can use this indicator on any time frame and any asset, but let me be straight with you about where it works best. Breakout systems need volatility and range, so the cleanest signals come during the London and New York sessions on the 15-minute and 1-hour charts. In tight sideways markets, you'll get false breakouts. Price pokes past the line, the signal prints, and then price reverses right back inside. That's the main losing pattern, and knowing it in advance will save you money. Monitor and adjust your trades. Once your trade is live, keep an eye on it. Be ready to adjust your take profit targets if the market changes significantly. Your stop loss, though, leave it where it is. Widening a stop because a trade is going against you is how accounts get damaged. Practice before you trade real money. Always test this indicator first on a demo account. Backtest at least 50 signals on historical charts and write down every result. You want to know your own win rate, not mine. That's the only number that should decide whether you go live. Enjoying this so far? Smash that like button if you find value in this video, and don't forget to subscribe and hit the bell icon so you won't miss future trading strategies and indicator reviews. Alright, let's continue and see how our live trades turned out. And there it is, our first setup of the session. Look at what just happened on the chart. Price spent hours moving sideways under this blue resistance zone, testing it, backing away, testing it again. And now, a candle has closed cleanly above it. That's the breakout the indicator was waiting for, and the blue arrow confirms it. Look at the panel on the left. Everything I need is already there. My entry, 5 take profit levels mapped out, and my stop loss, placed below the structure. I didn't calculate a single one of those, so I'm taking this buy trade right now, exactly as the indicator has set it. No adjustments, no opinions. Now here's where most traders lose their trades. Not at entry, but in the waiting. The position is live. Price has pushed above the breakout level and it's building higher. But notice something on this chart. It isn't a straight lineup. There are pullbacks. There are candles that go against us. And every single one of those is a small test of whether you'll stick to your plan. I'm not touching anything. Stop loss stays where it is. Target stays where it is. Because I decided both of those before I entered, when I was calm, not when money was on the line. This is the part nobody puts in a highlight reel. The trade isn't won or lost by the entry. It's won or lost by whether you can sit still while it works. And notice, price is now approaching our take profit zone. Stay with me. I want you to see exactly how this closes, because the way a trade ends teaches you more than the way it starts. And there we go. The target has been reached and the position is closed. Take a moment and look back at what actually happened here. The indicator marked the level. We waited for the candle to close beyond it. We took the entry with the risk already defined, and then we simply let it run to the target it had given us. That's it. No prediction, no guessing where price would go. Just a rule, followed properly. Now let me be clear with you, because I'd rather you trust me than be impressed. This is one trade. Not every setup will close like this. Some will hit the stop loss instead, and that's a normal, expected part of any strategy. That's exactly why the stop loss is placed before entry and why you keep your risk small on every position. What matters isn't this one result. It's whether you can repeat the process the same way every time. Second setup, and this one's a different picture from the first. So watch closely. Price had been falling for hours. Lower highs, lower lows, no reason to be a buyer. Then it started grinding back up, and it ran straight into this blue level. And here's the candle we were waiting for, a clean close above it. Blue arrow confirms the signal. Notice what I'm not doing. I'm not asking myself whether the trend should turn here. I'm not guessing. The level was drawn before price got there. The candle closed above it. That's the rule. So I'm taking the buy. Entry, 5 targets, and the stop loss below. All already on the panel. Now the trade is live, and this is the stretch where discipline actually gets tested. Look at the price action. Push up, small pause, push again. It's climbing toward the target, but not in a straight line. And every hesitation is a chance to talk yourself into closing early. I'm doing nothing. The stop stays. The target stays. That's the whole job right now. Here's something worth saying out loud. A good entry means very little on its own. What separates traders isn't finding setups. It's what they do in the 20 minutes after entering one. Anyone can click buy. Sitting still is the hard part, and you can see we're moving toward that target now. Stay with me for the close, because what happens after this trade is honestly the most useful lesson in the whole video. Target reached, position closed. Now look at what price did afterwards. It kept climbing, well past where we exited. A new level formed higher up, and the move continued. I'm showing you this on purpose. Yes, we left something on the table. That happens, and it's fine. Chasing every last pip is how a clean planned trade turns into an unplanned one. Take your target, close the trade, move on. And let me be straight with you before we finish. That's 2 trades. 2 trades don't prove a win rate. Some signals will fail. That's normal. And it's exactly why the stop loss and small risk per trade exist. Judge this indicator on 50 of your own back-tested signals, not on 2 of mine. If any part wasn't clear, rewind to where I explained the setup rules. Those details matter. Want to try it yourself? Download link is in the description. Open MT4, add it, and practice on a demo account first. No rushing. Learn it properly, then decide. If this helped, subscribe, hit like, and share it with someone who'd find it useful. Thanks for watching. We're building a community of disciplined traders here, and I'm glad you're part of it. Catch you in the next video. Until then, stay focused, trade smart, and happy trading.